Last 2 years have been a roller coaster ride for the real estate sector. With the outbreak of COVID-19 pandemic, the industry was staring at bleak future as the NBFC-led liquidity crisis and slow demand across the country had almost punctured the wheels of growth prior to that. However, the real estate sector has managed to witness a revival in demand in the last few quarters despite this ongoing pandemic situation. This rebound in growth was led by the combination of factors, including the government's support through various measures, record low home loan interest rates, and realty developers' decision to offer incentives and discounts to home buyers. Several state governments announcing stamp duty reductions during the year also helped in propping up the demand. Let's hear it from the industry experts as to what they're seeking and what's in store for real estate sector in this upcoming union budget. But before that, let's take a look at what kind of measures were announced last year in the budget for real estate sector. So, additional interest reduction of 1.5 lakh rupees in Income Tax Act on purchase of affordable homes was extended by one more year until 31st March 22. This was aimed at helping the demand for affordable housing sustain as well as reduce the burden on home buyers in this segment. The government also offered a tax holiday for developers building affordable housing, and that was extended by 1 year until 31st March 22. This was a much necessary measure given the period lost due to the COVID disruption, and this indeed helped in improving the supply of affordable housing units too. Land monetization of PSUs through land transfer to separate special purpose vehicles. And also, the government announced an amendment to be made to help REITs and investors raise funds from foreign portfolio investors. Apart from this, during the year, various state governments also announced several measures that supported the sector in creating more demand. In March, in Maharashtra, women home buyers were given 1% stamp duty subvention. Following that, in July, West Bengal government offered stamp duty cut 4% and 3% in urban and rural areas respectively for properties up to 1 crore and 5% for urban and 4% for rural areas for properties that are priced above 1 crore. In November, West Bengal government also extended stamp duty cut window till January 31st. In December, Delhi government extended 20% reduction in circle rates till June 22. This rebate scheme was launched in February 21 amid the COVID-19 pandemic and was to end in September 30th, which was extended earlier to December end. So let's hear it from our industry experts as to what is in store for real estate sector in this upcoming budget.
We expect some sort of rectification in the individual income tax rates. Corporate income tax rates have been brought down to 25%, but individuals are paying up to 42%. In the last 10-15 years, the standard deduction for home loans is only limited to 2 lakhs of rupees. And looking at the price of homes going up, the expectation is that this figure of 2 lakhs will be brought up to 5 lakhs at least. That will make a lot of difference. There is also an issue of investment into alternative assets. In the stock market, long-term capital gains is treated as 12 months, while in the case of apartments or investment into real estate, it is 3 years. So it's an expectation that that would be corrected so that the long-term investment in homes and apartments and real estate should also be brought down to 12 months. And that is something which we think will make a difference. The states have been constantly increasing the ready reckoner rates in order to get more stamp duty and more funds out of the economy, while the prices have not risen. So in many cases, people are buying apartments and properties at a higher price than the ready reckoner rate. And this is something which I think needs to be rectified quite urgently. Rental housing has been mentioned by the Housing Ministry that is a line which is required to be given an impetus. However, there has been no real benefit that we see. The returns in the case of commercial is more than 6%, while the returns in the case of homes, in terms of rentals in the case of letting of homes, is 2.5%. Hence, we require that the standard deduction of home rentals should be increased from 30% as it exists today to 50%, to increase funding for the purposes of locked-in projects, similar to what has been done for the Swami funds. HDFC, ICICI, Kotak are all ready on the same terms and conditions to lend money. And the real estate business, which is locked up for lack of funds for the last mile funding, needs more than 1,25,000 crores.
The limits of principal amount and the interest payment for an individual borrowing the money for buying a residential real estate needs to be increased. On the other hand, the developer who gets a tax benefit on the affordable housing as defined currently, two things requires to be done. The time period for giving a tax exemption needs to be increased by at least 2 or 3 years. And the definition of project affordable housing needs to be extended from 90 square meters or 60 square meters or 45 lakhs of value, to keep in mind the valuation of markets like Mumbai and rest of India. Like construction, the GST cost actually hits all the developers, and because of that, the cost is actually touching the sky. Give a GST credit, input credit, against the GST payable by the end customer, and the benefit can be passed on to the end customer. On the other hand, even the foreign direct investment rules, especially connected to debt, needs to be eased out for getting a debt in a real estate asset.
The sustainability of this recovery that was witnessed in the real estate sector, backed by the realization of need for housing among home buyers, now hinges on the support from the government in terms of rationalization of taxes and the much needed tweaking of affordable housing definitions, among others. Real estate sector, as we all know, is the second largest employment creator after agriculture and contributes around 6% to India's GDP, and these measures are expected to help the sector raise capital and create more employment. From here on, over to the Finance Minister. Keep watching this space for more budget-related updates.